on here? All right, welcome everybody that's new. Welcome to the room. Um, so let's talk about a couple things. Let's zoom out on SPX. Let's take a look at the weekly. Okay, we've been walking through this for quite some time. All the way up in here, we were watching this weekly channel. Really no real catalyst over the weekend. So to me, that's telling. You know, could we get a nice little squeeze up? Yeah, absolutely. There's a high probability of that. But if we just let's just take a look at the history right now. This is the weekly. We have we kept talking about this whole up here in this UTAT on the weekly. The distance that this thing gets away from the 200, it's it's simple. It's a simple concept, but it's just effective over time. Look at this. It keeps you can go all the way back. So even when they dropped it down underneath, this was actually controlled selling. It did capitulate a little bit and then it V'd out, but this is a rare occurrence. Once it reclaimed back here in 2010 and held it, every single time that it tapped the 200, it either dropped below for a couple weeks and then reclaimed it. And then as it gained more momentum to the upside, it's just like a parabolic curve, right? The faster the market moves up, the more violent the moves can come down. So as you see here, back in 2016, this is when Trump was in office again. It dropped back down, came back in, shot back up. We had another reversion here, but it didn't quite get there. And then here's 2018. It extended out. Now, one thing I want to show is this. This is the weekly. Oops. Let me get rid of that. Let's go to a different one. So that's roughly 12 and a half. Let's call it 13% drop from the overextension on the weekly after it broke. Okay. Now let's take a look at COVID. After it broke, same thing. This is a bigger drop, obviously. This was 30%. After it broke down on the MA, so once it started to flush, it was roughly 30%. Okay. And look at what happened here. They shot it underneath, right? Shot it underneath the 200. They reclaimed it, held it, and then look at the next week. They gapped it down under the 200, and then that was pretty much the low. Then the following week, it opened up equal lows, tweezer bottom, and then just kept ripping. This is when the Fed stepped in. Okay. Now let's zoom back out. And you can see every time it comes down to this 200. So this is going to be a big spot for me. I'm going to be watching this very closely. I don't think I'm just like highly confident we're going to hit this at some point. We're literally a couple hundred points away from it. So, but now look, we're way overextended. Once this thing, let's call it. So right now, from the break, from the break of March 24th week, right? So is it last week? Yeah. Or no, sorry, March 31st, the week of the March 31st. That was the last weekly test of the 13, and you have a crossover, right? The crossover is not that important, but the point is from that break, just like we looked at all those, you had 12.5%, 13%, and then what did I say COVID was? This one was from this break. It was 30% from the break, right? Why am I even talking about this? Because it's statistics, right? These are statistical overextensions during a catalytic time period, right? That's important because patterns repeat. So right now we're sitting at 11 to 12, let's just call it 12% from the break, okay? So we got more room down, right? And let's just say we do COVID, that full extension is 13%. or sorry, 29, 30%, which when I was talking to you guys last week, um, I think it was Wednesday or Thursday, right around the tariff time after the drop. Yeah, actually, it was the day after the first drop. So right around the 5,400, 5,300 ish. I was saying, 28% from all time high to 30% is very, very realistic. Now, let's take a look at the extension. 30% from the break. Okay, let's just go to 20%. 20% brings us right to 4,600. Okay, let's go 30%. Let's see, just see. There's 28%, 4,100. So let's see a little bit more, 30%. Yeah. All right. Yeah. So 28%. So this is a realistic target based on statistical extensions during just looking at this simple thing right here. Right. So now let's think about, okay, everybody's like, oh man, I want to buy the dip. I want to buy the dip. Well, we need to hold on a second, and first of all, let everything settle out. We have, like I said, we have all these catalysts coming up. We want to really be careful. We have the VIX it's in the ceiling. Premiums are jacked up, and if you're going to buy anything, it's going to just be shares. And personally, I'm not going to be buying anything right now. I want to let this whole week play out, and let's get into next week. Let's get into some more of these catalysts that are coming up and see where the market shakes out. Because why would I want to be buying, here when if there's a possibility we do the same pattern, drop down underneath, and then we can snag stuff and start building positions here, right? And then if it does pop up and then drill down again to this level right here, which was uh, hello. So I'm not saying we're going to go down here. I'm not saying that at all. I'm trying to keep an open mind here, but there's really nothing that's making or that's supportive of the market right now, and that's the reality of the situation. People are, oh, Trump this, Trump this. It doesn't matter. Let's just play what we see in front of us and manage our risk. The last thing you need to do is jump in and start buying the dip because everybody else thinks that you should be buying the dip, and then all of a sudden the dip keeps going. Okay, so if we're looking at this as a possibility, and my contacts are looking at a 30% target from all-time high, that brings us right at 4,300. Okay, so between 4,300 to 4,100 is very realistic. It's a spot where I would be interested in buying in this zone. Okay, for long terms leaps, even like trading it short term out of the hole, and then buying shares and building long term life-changing equity positions, right? So at these times when this happens, the media is like doom and gloom. They're like, oh my God, the market's crashing. It's never going to go back up again. It doesn't happen. It's just, you just buy that fear and you just close your brokerage and day trade a little here or there if you want. But that's my 2 cents on the actual overall market. Not interested at all buying right here. And that's okay. If you know what, the market goes up and it starts ripping, it's all good. That's okay. I'll build in positions because the market's, I don't think the market's just going to go back up. It's just not. What's the catalyst? There is none. Like, I mean, yeah, there could be good news about the tariffs. There could be good news, but I doubt it. I mean, really, like, let's be honest with ourselves. Like, do you think Trump's going to back off the tariffs? No. Make America look like a bunch of, you know what, he's here to make a change. And when you make a change, becomes pain. Change is really painful. Okay. And people don't want to accept that because they look at him like he's an arrogant asshole. But at the end of the day, he's doing what he needs to do to get our economy in a better shape. We have GDP declining, right? We have and mainly because he took away a lot of that excess spending that takes away from the GDP, and that's okay because that was wasteful spending. And we have consumer sentiment at an all-time low since 2022. Then we also have credit spreads tighter than ass cheeks when they're clenched, and you have investors, the best, the most high-performing investors in the market. Then they're not buying at 5,000. So why would you even consider at 4,900? If they're sitting why do you think Warren Buffett got out? He saw this coming. He saw the writing on the wall. You know, and I promise you, probably a week after he buys, there will be news reports that he bought, and the bottom will already have been in, most likely. But we're lucky. We're very lucky because we've got a couple admins in here that have a lot of really good contacts, as well as I have some really good contacts as well. And my contacts like I said, I'll give you all the update. Okay, they did not buy anything. So actually, I'll start from the beginning. They sold 50. So they were 100% allocated on the run up, right? They sold what day? They sold the day of the top, 7 points from the top here, 15% of their fund. Okay. Now they're 85%. Then on 3/31, they sold another 15% going into the tariff week, right? So now they're in 30% cash, right? So now we came all the way down here to 5,000 Friday, right there. And they did not touch it. Now let's talk about their hedges, okay? So up here they were 100%, and then at this point they had rolled off 20% of hedges, right? At the 5,000, at the first drop of 5,500, they rolled 20% off. Then they all reassessed based on where the reality and the facts and where they see the economy going, and where they're analyzing the market. And they had a consensus that they saw another 20% down based on valuation and based on the geopolitical and economic backdrop. Okay, so what they did is they held their hedges. That was the decision. We're going to hold 80% of the hedges. Obviously, that was the right decision. Probably one of the big reasons why they're one of the top performing hedge funds in the last 8 months. So they rolled off on Friday another 20% of hedges. So they have 60% hedges still on. Okay. And they're still in 30% cash. It's a pretty good weight, right? Really nicely balanced out. If the market rips up, they're obviously going to understand when they need to buy. But the key point is, I think for everybody here is to understand, like, they did not buy at 5,000. So if we're sitting here at, 49.20 on SPX, and ES is at, 49.55, down 150 from Friday, are they really going to, dip their toes in? Maybe they start to deploy some capital. I'll know. I'll talk to my boy, and we'll have conversations about that. So let me see here. And I'll know, and I'll update you guys, and I'll let you know. Say, hey, they're not 60% now; they're 40%, and they started to nibble on positions. Okay, so this will happen. They'll start to get allocated more and more and more. The CEO also came into the meeting Friday, and he was like, and for like just these type of people in their place of business, they don't just shoot from the hip. You know what I'm saying? They don't just like say, "Oh yeah, we're gonna do this, I think," and then not do it. These type of people are very certain, and the experience of these people is great. I mean, think about the contacts, right? This type of person's got 55 years of experience in the markets. He's taken a $500 million fund and built it into a over 10 billion plus fund. He's looking to double it. He has people on staff that used to work in the White House. He himself used to work in the White House. Okay. So you look at the body of work, right? Look at, this is a high net worth fund. This information should not be taken lightly. Okay. And with that said, can we get a face ripping rally tomorrow? Absolutely. We are really overdue. We know this. And could they be buying? Yeah. But one thing I do know about this particular fund is they are active. They're an active fund. Even though they always stay in 30% cash, I'll see them buy heavy and the next day on the bounce, dump everything they just bought. So, all right. Now, when the CEO came, let me go back to the story. So when he came into the office, he said, I'm 90% sure that the market's going to be down 30%. Think about that. That's a bold statement to tell everyone in the office after the market's sitting at 5,000 down almost, it's what, 17.5%. So, with that said, we're going to just keep doing what we do in here, which is, identify the structure, right? Identify our key spots where we can have our edge off the morning, just like Friday and pretty much every day we scalp our trades, whether it's 30% or whether it's 2, 3, 4, 500%. Okay. And then if we get our edge where maybe they do bounce us up, let's go to ES. I know a lot of people are on ES. Or yeah, let me see here. Actually, no, let me go to US 500 because everybody's on US 500. So, a lot of people in this room are on US 500. Why do I have that line there? Okay, let me just adjust this. Okay, so on the US 500, US 500 is the SPX of the overnight, for those that don't know. It came down really close to the channel here, which is really interesting. So I personally would love to see this nice big bounce up. Now let's talk about schematics, okay? Schematics are Wyckoff. It's clear as day distribution. We all know, most of us know what this is, okay? Okay, so what is distribution? Distribution is where the bigger players, they're called larger operators. Let me get rid of some of this shit. The larger operators distribute shares, right? That's why it's called distribution. You can see up here how in this run on this, let's take a look over here. So look on the left of my screen. On the run up, as it's called a late phase of accumulation, the breakout, right? You can see it on the larger time frames. It shoots up. Here's the shoot up, pops up, comes down. I'll draw it here. Shoots up, comes down, shoots up, comes down, comes up, and it goes through this, and then all of a sudden it pops up, and then we're in a trading range right here. That's the trading range that you're looking at right here. That's the box. That's the distribution box. And this is on the weekly, you guys. Okay. Once the box breaks, now we start to distribute. Now, the thing about Wyckoff is from what we've learned and how we draw stuff up in here is it cycles in different different patterns. So you can they could be in accumulation right now on the 15, the 30, or the hourly, right? They could be reaccumulating right now. And for a breakout to what? Fill this gap up here, right? To 5,000, right? Or maybe a little higher, right? That's a possibility. But we're still distributing on the weekly and on the daily, right? So as it goes through these cycles, we can gauge key support levels based on structure, based on gamma, based on positioning, based on all the data that we're using, and make and also based on, well, obviously flow and all that good stuff, um, and make a really good educated play and define some risk and take a short or take a long, right? So I just wanted to go through that. It's really clear as day. And then what's really interesting is this. If you look at the monthly, I'm going to throw SPX monthly up. Look at that. I mean, wow. This looks so ugly. It looks like an actual distribution top on the monthly. So for me, like, I really want to be careful, being like extremely, really, really bullish, up here because the monthly is distributing. And this thing can take a while to distribute. But that's okay because we can be trading in a mat. Once this thing it finishes its distribution, whether it's to 4,100, whether it's to 4,600, or whether it's all the way down to 3,500. Okay, it doesn't matter where it goes to, but once the monthly does this and it finishes the cycle, it's going to have a huge range, which will be great for trading before it starts to as it starts to reaccumulate and go higher. Okay. Anybody have any questions on that? Awesome. Let me just check some stuff here. So Kramer called for bottom, I heard, or no, not for apocalyptic Monday, I think. So if he's calling for an apocalyptic Monday, and everybody is looking at futures right now and they're like, oh my god, a huge gap down, yada yada yada. What's everybody going to want to do at the open, right? I think they're going to want to personally, I think they're going to want to short the whole. Could they rug it right back down? Yeah, they could. There's two schools of thoughts. They could be like, oh my god, bottoms in, or they could be thinking long it. So how I want to take this morning in the morning on is just identify key levels, key supports, and see what the data is telling us on options depth, and then try to take a nice trade, see how the day goes on, and capitalize on that. And then from there, I want to find more shorts. To be honest with you, that's my main interest. Is I want to find short positions for next week and also the 30th. Uh, do I know when the top of the maybe let's just say this is a dead cat bounce, right? Right? It's a big move up, comes back down, and then squeezes up here and shoots up into close, right? And then it hangs out here, and then maybe we get another catalyst and it fucking drills, right? Well, we don't know if they're gonna stop it here, here, or up here. We don't know that, and that's okay. But we can identify ranges and intraday key levels, and based on how the positioning changes throughout the day, we can have a good gauge on how the market's going to move. And when we do that, then we can scale in to those puts for next week and the following week. The last thing I am going to say about my contacts is that my buddy called me today, and he told me, or well, his whatever the person, his relative that works at NVIDIA. I don't know if I just said this. I'm like a little tired, but they just she's like, I need you to buy puts for SPY for me. for the 15th and the 30th. And so he's never had this phone call ever because he does his own managing of money. And that's a very like kind of like what? And this person works pretty high up in that company. So you know, for me, I'm thinking like, well, what the hell is going to happen? Is there going to be a uh, uh, semi tariff that gets shot out of the gun, you know, like or something like really crazy that really, you know, unhinges the markets. Like, why would she be calling him at 6 in the morning on a Sunday, telling him to make sure he gets in these puts? The fuck, right? So there's all these little clues with, you know, with people that you have contacts with or whatever it is, right? But I think it's just really important, like, just be careful. If you're gonna take your own trades tomorrow, be careful. You'll see me alert. For those that are new, we alert to the pro trade zone on the day trades, and then we use swings for in the swing channel, and those are the swings. So I'll go kind of run through some stuff. So I always put out the entry for you guys, and then I start streaming 15 minutes before open. When I start streaming 15 minutes before open, you know, I basically like talk about the market, talk about what I'm seeing on the VIX and where I'm seeing on the tape and the data, and then mark out our key levels that we're looking at. You know, obviously you can see we got a lot as it is, but then from there, um, you know, we take our shots off the open. My whole key for me is I want to define my risk as clearly as possible, right? And for everybody should too. Like if I know, for example, that this is the downtrend and price goes up here right by open, let's say, and let's say this is clearly this is the uptrend. Okay. So we have a downtrend and uptrend. So one of the things that I pay attention to is compression a lot. So what is compression? It's like a tube of toothpaste. When a tube gets compressed, and no, you can no longer hold it in, the top pops off, right? So you can see here we have a downtrend, we have an uptrend. As long as this uptrend holds into the pre-market, right? Or sorry, into the pre-market, into the open, we could see something like this. And then it get really tight. And look at this. Sunday, the London Open is at the apex of this wedge. It's pretty interesting. So we could see some action for those that want to trade. I'd be watching this personally, and it's kind of lines up right there with, you know, 49.75, and then above that you have 50.40 and change, and then above that 50.70. So and then underneath you have it's actually going to be 59 or 4,900. I'm talking US 500 only. So 4,900, and then 4891.3. And then if it compresses in, we could get an outsized move at the London session to the upside, or it could come out and flush. What's interesting is typically typically we'll see this on, not all the time, but we do see it a lot on gap downs. You see them float it up, right? They float it up, and then everybody's like, oh, everybody's sleeping, and then the London Open happens, and then all of a sudden you get this massive fucking move, you know? So I think for future traders, I think that's important to notice the patterns, and then also to keep an eye on the compression of this downtrend and where it lines up. If you see, you know, it starts to get up into to that change, the London change, and all of a sudden it starts to get underneath it and reject, you know, that's not a bad place to look to go short. Okay, but be careful because they could fake break it down and then reclaim it. Okay, so I'd be watching that, and I will cover a trend line strategy. It's basic, but it pays. It pays fat, really good. So obviously there's three strategies within a trend line. with how you play a trend line. First of all, every time you see a low set in pre-market, and even you can do after hours here tonight, you have an uptrend. These are algos that are holding this. Like there's no retail. No retail's like, oh yeah, I'm gonna buy here. Like these are algos that are controlling price on low volume. Okay. And it's pure manipulation. And so I draw a line there, and then let's say it holds this line the whole time. Well, you can grab calls off that line all day. What's your risk? Well, your risk is the line. Look, it's here. You can see here. You don't know it's there, and you don't know it's there. But here, once you see this lines developed, you can look to take calls on the line. Obviously, you're going to be scared because you're like, oh my god, we just dumped. But you're actually in an uptrend now, right? On the smaller time frames, and you want to take, I would be taking that long, risking that. That's a better risk to reward taking a long there with a close underneath this as a stop than to be taking shorts in here and now you're fucked, kind of holding the bag a touch, right? Thinking that they're going to flush because we're already down a shitload, right? And everybody trading futures probably like, oh shit, well fuck, well we could dump. And yeah, we could, absolutely. But now let's zoom out again and think about the context, right? We've literally drilled, we were at 5,600, 5,700 on Wednesday. So we're down 800 points roughly. We're due for a bounce. Can they not give it to us? They might not. They absolutely might not. We talked about this a couple of weeks ago that we could see gap down, gap down, gap down action. That's the most painful trade to be in. Or to trade because premiums get jacked, the IV gets through the roof, and you're paying and you have to deal with these nasty spreads, right? And for us to get in, and the hardest thing to do is to pay $20 for out of the money puts or calls. It's hard. So that's the pain trade, right? So tap and go is a trend line strategy. You have trend lines developed off 2 taps and you take it long, risking that one. Conversely, you could sit here and say, all right, now I'm going to readjust my this channel to here, right? I have a wick here off the opening print, right? And then I have another wick that just got created. Okay, so I'll zoom in and here's my setup. There's my channel that's being created, right? So, as I'm getting coiled up into this channel, as long as this lower trend line holds, there's going to be a big reaction. So before I started trading 0DTE, I literally only would trade compressions and compressions and overextensions and mean reversions. Literally, that's all I would trade for like 7-8 years. And then it was 0DTE, and I started to learn. And what I would do is I would identify the ranges on the bottom, and I'd target, and I'd try to find these trend lines and understand based on the EMA structure where it was compressing to and where I could find risk, right? Where can I define my risk to take the best trade I can to give myself the best opportunity to lose the least amount of money and make the most, right? So now as this channel is developing, we could see the second setup, which is called the fake breakdown, right? We've all heard about it, right? We've all seen it. It's happened a lot in the last, 4 or 5 years. Fake breakdown. Oh, fake breakdown. You're like, fuck. Plunge protection team comes in, fake breakdown. So what is that? What does it look like? What is it? How does it behave? How do you read it? So what happens is, let's say price comes down here. It starts to hit the trend line, okay? And it's weakening. And you see on the RSI bearish divergence, right? So price, what is bearish divergence? It's when price makes a lower high. So there's price. There's a high here and a lower high there. That's price, right? So that's price. And the RSI makes a higher high. So the RSI does this, right? Or no, fuck. I'm sorry, guys. It's the opposite. I'm sorry. It's the opposite. I don't know. I'm too much wine. So, um, so the RSI is creating a divergence with the price. Price shoots up, and then the RSI can't make a higher high above the previous high. So that's how you tell that there's a divergence happening, and that means a bigger move to the downside. So that could show itself. But if price breaks down, you have two options. Personally, I like to wait until the retest of this. Okay. And I'll watch the candle structure, right? What do I mean by that? So as the price breaks the trend line, this algo line, is it going to just flush, or is it going to kind of flutter around, build out a bear flag, and retest and weaken so I can maybe grab puts off this trend line, risking this, right? Or is it going to flush hard and then start to build support, right? You see a doji, you see high volume down here, you see the volume bar and it's full of green, right? And you see a doji, another one, you're like, well, shit, you should be considering a possible fake breakdown at that point. Okay. That's a situation where I probably would get out if I got in shorts there, and I take my 5-10% or whatever and get the hell out. However, if price came up, let's go back and get out of these. If price shoots down, comes back up and retests, and I get in puts, right? And it reclaims it, and then it holds it on the 5-minute, I'm out. I'm out. Okay. I'll lose 10-15% max and I'm out. That's all right. Because this is one of the best paying trades in the market. Because what happens is when you get the retest, now this is the second piece. So you have the fake breakdown, right? And you read the fake breakdown based on candle structure, volume, right? And how it's acting off of key levels, right? But then there's the breakdown where it's the first thing is the failed retest. Okay. So the failed retest is this. Price breaks down, comes up, retests it, and the volume is weak. The candle structure on the retest is doji, high wick. Maybe it pops above and it wicks down. It can't hold. The strength of the demand or the buyers is weak, right? Nobody wants to buy. Now you can hold that with confidence, still risking a 5-minute close over that trend line. And so what will happen a lot of times when the price gets weak up here, you'll see a fucking huge move down, and you want to sell that impulse because it'll pay fat, especially if you're in zeros, it'll pay like 70-80% or more. And then that's a fun trade. And then the rare one is when you get these. It's just a flat out breakdown and you just watch it go. Unless you get in up here or you're like, man, this looks like it's going to break down. I see the divergences showing on the RSI. It's going to break, and you get in, and then it just drills, right? And flushes hard, right? So that one is you don't chase it. So one thing that we do in here is we do not fucking chase. If I throw an alert out on SPX 0DTE, sorry, I muted myself on accident. So one thing I will say is when you see me alert in the trade zone or in the swings or any of the admins alerting great setups that they like, do not chase. Okay. I think a mentality that we want to have in this room, and I've been preaching, and all of us have been preaching since we opened up in September, is this: get a better entry than the alert. If you don't get a better entry than the alert, don't chase it. Okay. Don't chase it. It's okay. Just wait. There's always another one coming. Okay. And that's okay. You know, if you want to get in and you've got you see, oh man, I can get filled right at the alert. Great. Take a starter size. Okay, you could take a starter size. What's a starter size? It's a couple contracts. Let the one or two contracts bounce around, right? Because you don't have to have a lot of money on the table to make a lot of money, especially in this market when we're doing zero DTE or in the type of volatility that we're handling here. It's great. It's fantastic. But if you oversize on an alert and and you get stopped out for, or you get a nasty candle the opposite direction and it breaks a key level that we're wanting it to hold, well, you're cooked. Even if you take a 15% loss, that's a big loss on full size, right? I want your stops to be tight. I want them to be, if you want to do 20% off of three scales in, okay, that's fine. I would prefer it to be more to like 8 to 10%, especially for newer traders, because what that's going to do is it's going to help you with your entries. It'll help you because you will get stopped out for sure. But then on the other side of it, if you're able to listen to me on voice and listen to the trades that I'm calling on voice as I'm calling it, you can get in because I got to get in too because I'm trading with you guys, right? And I'm also then it takes time for me to type it out, right? So the benefit of being on the voice and listening, there's a lot, right? Because you can get in with me, right? And you'll hear me say, okay, Tesla needs to hold 260.30, or it's going to flush. If it breaks and can't close over it on the 3 minute or, even 1 minute, get the fuck out, right? I'll write that in the alert too. Needs to hold this level. Okay. So then what are you thinking? Oh, well, shit, I missed the alert, but if it comes back down to that level, I'm going to grab an entry on those calls. And a lot of times it does. Right? We had that set up on Tesla the other day. Actually, I'll go recap it. It was a fun one. These contracts for us went from $490. You can look in the alert section. $490 to almost $2,000 a contract. Um, and then we were holding those, and then on voice, I was calling out the 270s for the same week. This was last week. Yeah, last week, early in the week. Yeah, this was the trade right here. Did they hit two? Yeah, this is the trade. So let's take a look at the 5 here. I'll just recap this really quick. So very simple setup. Okay, so right off the open, so they had their Tesla delivery numbers. That's what the deal was, right? Tesla came out with their delivery numbers and they drilled the market. This is classic, bait and switch. We call it the okey doke, whatever you want to call it, the tingleberry. It's the flush down, trap everybody in the hole, chasing the short, and then rip them, right? So, we saw the setup. It was a layup. Got in damn near off the bottom on the contracts. Not quite on this wick, but we got on this close. So we grabbed it right here off 55. I think it was 55 hold. Yeah, so once this candle closed above 255, we got in the 265 calls at 4.9, and then we trimmed into my 265 spot. And as it's consolidating, then what do? Then we move our stops. We always move our stops to break even or higher. Okay. Then what happens as it's kind of chilling and hanging out here, we're watching this price action, right? And what does it do? It wicks down. And we were watching it live. And I said, it needs to hold 260.30. I think it was 260.80. Was it? Or no? No, it was this candle structure I think I was looking at right there. Yeah. Yeah, it was in the low 260s. So it was this spot right here. I'm looking at supply and demand, and I'm looking left too, right? So you can see here, right there. Let me make it big. So you can see here back in pre-market, this was a pre-market low, right? Right there. And they shot it up, broke it, never came back and retested this zone very aggressively. And they did a little here, popped it up. You could say this is even a bull flag, right? Right, and which it obviously is from hindsight. But they came back down, they held that zone, and then we were like, okay, well, as they're chopping around here, we're like, let's get calls as close as we can. I think it was kind of starting to drill, and we're like, okay, 260 has to hold. I can look at the alert actually. Let me see here. I think I wrote it in there. No, I didn't write. I thought I wrote like 260 has to hold or something. Let me see here. Yeah, I don't think I wrote that on there. Sometimes I do, and sometimes I don't. But on live, I was walking through, and I'm saying like, "Hey, this spot had to hold," and so just call it 260 and change. And guys got in the 270s at like a couple bucks, and this thing just went on a ripper. But the key point about the whole story is not about the ripper and the trade we took, but about how we took the trade, right? We took the first setup based on, bullshit, really. We knew that, yeah, that this is a typical pattern for Tesla. And then we looked and identified a key spot at 255. It held. Then we got in, and then we took it long. And also, they were loading these contracts pretty heavily, the calls on that side. So that was a really fun trade. And then people that missed the trade, they took the back test, and some of them actually got in right on that wick too, which was pretty cool. And obviously it went off. So that's a trading style that we use in here as well. Okay, market's moving pretty good. Let's see what's going on here with the VIX. Like, oh, what are the XX futures? Dollar. What's the dollar doing? Oh my gosh. Look at this. My pattern. I haven't looked at this in a while. I had a W pattern on this thing. That's invalid. Wow. It's crazy times, huh, guys? This is a good time to be trading. Everybody should be, learning as much as they can if they're new, protecting your capital, taking your profits where you can. Let's take a look at BTC. So I have a channel. I have a couple targets. 70K is my first target on BTC. And then 80K is a big level they just broke. I would like to see a retest of 81.2 tomorrow morning. I'd like to see a ripper and squeeze, and then I would like to look to get in MSTR shorts. We talked about it on Spaces the other day, and it's just one that I want to go short on for a swing. Let's see here. All right, so this setup for tomorrow is really interesting. And I personally, based on, for those that are new, I'm going to tell you a little story. I traded an account, and I did a case study a few years ago. I'll bring up the chart. This is like, for those that are new, everybody, I'll just start out with this. This is important. For, everybody wants to believe, right? You want to believe in the good in humanity, and you want to believe in the good in what the media is saying, and you want to believe that everything is good. That's just how we're conditioned. Unfortunately, that's just not the case. It's just not. My best trades are buying bullshit. It's the truth. Okay, so I'm gonna pull up the daily here on Coinbase. Okay, and I'm gonna explain to you this whole account that I traded was only designed to buy bullshit. I I had parameters. I would only buy high quality companies that got really bad news, like really bad news, right? And then I'd wait a day or two, roughly 2 days, and then I'd watch the structure and watch the option chains and how everything was built out, and then I'd inverse that whole move. And 90% of the time, my options were up well over 50, 60% within 2 to 3 weeks. Sometimes they were up hundreds of percent in a couple weeks. So let's talk about this. June, where are you at? Here we go. Here we go, right here. So, what was happening during this time? Anybody know? Okay, this is the Bitcoin ETF time frame, right? They were what they were doing during this Bitcoin ETF time was, Larry Fink. I'll never forget it. Larry Fink comes on and says, "Yeah, we're not a fan of Bitcoin. We're not buying it." And then Jamie Dimon comes on and says, "I don't think Bitcoin's going to get the ETF's going to get approved. Bitcoin's not even an asset." Hold on, somebody's mic in. It's all right. I got you. So, all right. So, what happened and I was trading at the time in a good friend of mine's room, and learning as well, and also, giving setups, right? And because I'm just a strong believer in that, you can have your own system, but always be open minded to refining it, right? And find your own style. As long as you manage risk, you're going to be in good shape. So what happened here was Larry Fink comes out with bullshit about Bitcoin's not even an asset class. I don't see it sustainable. Jamie Dimon says, we're not buying it, blah blah blah. And the ETF's not going to get approved. Then there was news that came out on this was that news, right? Like this gap down was that news. And uh Kramer comes on and says, "Guys, sell Coinbase, get rid of it." And then they came out and said Kathy Wood sold 250 shares, 250,000 shares. And I'm like, "Oh wow." And I'm like, "This is a perfect opportunity for my case study account." And I'm like, "Okay." So I looked at the tape on the fucking bottom. I bought shares down here at 46, 47. And then I also noticed that there was multi-million dollar sweeps hitting for August. Weird. If it's such bad company and bad company and the ETF's not getting approved, why would they be loading multi-million dollar sweeps, right? So look at this. You can check the date. You can go YouTube and back test me if you don't believe me. This is June 5th on Monday, 2023, right? Look at this. That was $49, call it. Fucking middle of July, 116. Learn to read bullshit. Don't believe everything you fucking hear. Hold on. Sorry. Florida Hokies messaging me. Who, oh, fuck. Oops. Uh, Whoever was got the winning thing for Florida Hokie, please DM me. I fucked up. My bad. I'm sorry. Oops. Let me think here. DM me. Just click my name here. I'm sorry. I'll fix that for you. Oops. Please DM me. I was trying. Yeah, we had a little thing for him. Yeah. Hold on a second. Let me just fix it. on. Oopsies. All right, let's get back to it. Okay. So that's just like a perfect example. And you guys, this is not just like a high time frame kind of deal. This is something that personally I read into candle structure every single day. Every day. All the time. I love it. This is my favorite part of trading. Look at that. Oh, why did it change this? Look at this. Look at that. They're trying to break this little uptrend that we made here. This will be interesting. You see if they hold this, break it, and break this channel, and then widen this thing out a little bit. They could do that, right? It could be that channel, or it's going to fail here and come down. Um, so, look at the candle structure, right? This is important. Just basic understanding of how to look at price. In here, we like to focus on what pays. Watch this thing fucking reject. So to me, what does pay? Oh, what do you know? It's an hourly change. Interesting. Look at that. I would bet money this fucker drills right back down. So let's talk about structure and what it's doing, right? Maybe I'm wrong. I'm gonna flag it and go. So look at this. This is structure. It's like, oh, hey, we're going up, we're going up. Come chase me, come chase me. Everybody's now going to get calls. Nope. Now they cook the premium and then they boost it. People are going to try to short this in regular trading hours, right? They're going to try to short this, and but you really want to be careful. Like if anything, like we were talking about the other day. I think I was on, and Ivan was talking too. We were talking about how to get good fills, right? Well, there's like the best traders in the market, they buy the inverse, right? So let's talk about like statistics, right? So let's talk about this. And this will help you understand and how, because a lot of people get fearful when you're in an uptrend. They're like, well, why the fuck am I buying puts? Why? Well, because there's a couple things and a couple reasons why you want to do that. You don't just blindly say, oh, I'm going to buy puts because it's in an uptrend. No, you don't do that. What you do is you got to understand, okay, market just gapped down, right? Look at the distance we are from the EMA 13. Okay, it's 54 here, and they gapped it down. That's 150 points roughly, or more, right? So as they open futures up, what's happening psychologically within every fucking person looking at futures? Oh, I better short it. I better short it. I got to short. Oh my God, the market's drilling. Oh my God, it's going to fall apart. Kramer said the fucking Black Friday's coming in. I got to get in. I got to get in. Right. But statistically, if you're looking at it and you go look at the history of price, and I use the 13 and 21 and the 200 EMAs. Look, you cannot find me another example where when the price gets overextended and shoots into it, shoots away, you cannot find me an example where it never reverts. Extension, reversion, extension, reversion. It's look at this, extension, reversion. Same shit, right? But why does it do that? Well, first of all, funds are triggered too to buy on certain mean reversions, extensions and reversions. It's just that's what they do, right? But also psychologically, right? People chase the move. FOMO. FOMO is a negative emotion, right? They see this big gap down. I better get in puts. Oh my God. Oh shit. Oh man. I better get out. Right? That's just classic. Now watch this. Now I'm out, and watch what they do. Oh, I should have held. Shit. You know? Like, everybody's done that. But, like, this is a very simple way to gauge what side of the trade you should be on. Now let's talk about premium and how the options and the IV and how the contracts react during this statistical move, okay? So, obviously, we know if you're in puts, the IV is ripping, right? It's going up, it's shooting as we go down. The VIX is also going up. So you have a lot of things working in your favor as the price goes down. So what's happening in reality is the movement of the price is so aggressive because it's overextending at an aggressive pace. The contracts are mispriced. They're trying to price in the cost of that contract, but it can't. So it's overpricing them, and that's the IV, that's the VIX, and the velocity of a move away from the EMA, and that juices your contract. So you want to sell as all those things are pumping, right? Because if you don't do that, you're going to lose money or you're not going to make as much. The guy who sells here on this move is going to make a hell of a lot more than the guy who sells, let's just say right here at the same spot, 15, 30, 45, an hour and a half later, most likely, right? Because the time and the way the options move, they're jumping so aggressively on this candle, and you're capturing that pump, right? And you want to capture that. And if you keeps going down, great, that's okay. That was a hell of a trade. That's a great move. And then what you do is you scale out 70%, you move your stops in, maybe you're up 400% or whatever, 100%, and you scale out maybe, or you put your stops in at say 200%, right? Or you know what? You take the whole fucking thing off and say, man, that was awesome. This is great trade. Let me lock it all in, right? The last thing you want to do is hold full size and watch this shit happen. I see it happen all the time. It's holding for hope. Oh, but you know what? Oh, I think it's going to go down. We're in a bear flag and yada, yada, yada. Like, why do you do that to yourself? You could have scaled here, taken the 300-400%, and then look to reload at a higher price into a key support or a key resistance level, right? If we're up in here, or maybe we shoot up here, 50, 120. We don't know, right? We have an idea. We can watch positioning, we can watch a lot of stuff, right? And then you can use all those profits and roll it right back in. You know, you just got to protect your mind too. You gotta be smart. You gotta less time in the market, the better. Get in, make your money, and get the fuck out. Get in, lock in your money, build your confidence, and go enjoy your day. Pay for a steak, buy your girl some stuff, pay your rent, whatever it is. Pay off a house, doesn't matter. That's the name of the game. So obviously when we take longer term shares and long term swings and we start to chill and stuff, that's a whole different ball game. Okay, but we're talking about day trading strategies here, right? And so um I just feel like a lot of people don't pay attention to the simple things. These are the things that pay. And a couple of the things I'm going to touch on here about psychology is you know, we're not here to just trade all fucking day. Okay? We're not. We're here to get in, grab our money, and get out and wait for the next setup to find our edge, to define our risk clearly. When I take an SPX zero, I want to get it on the level or on that key spot. Otherwise, I'm not even going to think about trading it. I don't want to fiddle in the middle, if you know what I'm saying. You know? So personally, it's like, you know, uh, for me, it's about creating and repeating every day the best habits that I possibly can. That's it. And then I don't wanna create bad habits. I don't wanna, I wanna make sure that I'm behaving and thinking in the moment properly. It's really important. So, it's like, and let's just talk about bigger picture types of things. Like, what I'm talking about here, guys, is like it's process thinking. Very simple. It's not outcome. So you have outcome. So outcome is like, you know, I need to make 5 grand tomorrow. I'm gonna make 100 grand this week. I need to do this. That's outcome thinking, right? Right? Oh my, if you put in timelines on stuff, on price and what you need to make, you're gonna fuck up. It always happens. I guarantee it. Not being negative, it's just the reality. It's how the brain works. Okay. You get in your own way. And then you're like, oh man, fuck. Like shit, I fumbled the football again. And then you're like, oh man, if I would have just held or if I would have done this. It's just a cycle. And it's not easy to break. But you have to be due diligent and you have to be disciplined. Fuck motivation. Discipline is what matters. Motivation is like, you know what? I don't feel like swimming laps today. So like for example, my nephew, he's 9 and his goal is to be an Olympian. You're gonna see him. I think you'll see him in the Olympians. His genetics are great. He's got the body for it, and he's got the work ethic, and he's got the people behind him to help him get there. But more importantly, is like you know he's like going every single day in a process minded behaviors. Like in every behavior he's making, it's process, right? He's got the goal, right? You got the goal, but he's focused in the moment on the process, right? You don't want to, in focusing on the process is like in trading, it's focusing on what pays. When I wake up, where would I take puts? Well, I sure as hell ain't going to take fucking puts here at 4,800, you know? But I would actually take calls there, closer to the money, right? Obviously, maybe even deep in the money or at the money if I have a larger account. If I have a small account, I'm not touching this shit, right? So if you're playing calls out of the money, I know that if I'm doing too far out of the money and the VIX is cranking and really high like it is, there's no money in that. Don't do that. Okay? Unless you get a squeeze upside so aggressive that the IV doesn't calm down as much. That's a different scenario, right? So, because what you can do and you guys got to realize this in these high volatility markets like we're in now, okay, it's really important to protect your money and understand where you can have an edge, whether you have a $1,000 account or you have a $2 million account. We've got people that have large accounts. We've had people take 50 grand into over $1 million from December till now, and um, and they're trading smart. They're not trading loose and like a lunatic. Okay, and going back to process, you know, when you're thinking, it's like you're a sniper. You got to reprogram. You have to reprogram what you really want. Okay, a sniper's thinking like, I need to kill the target and I need to protect my fucking men, right? He ain't fucking thinking, man, if I kill that guy and I kill that guy and I save my guys, I'm gonna get a purple heart. you know, he's not thinking that. Like that's trading, right? You don't think, well, you know what? I could make all this money if I did this, and I'm gonna hop on the option chart or option calculator doohickey thing, and I'm gonna see how much money I make if this happens. No, that's not how you want to really be thinking. You want to be like, where's my edge? Okay, what is the market telling me, and how can I read between the lines, right? That's where your edge is, right? For me, that's where my edge is. So, um, Then, as that sniper takes care of business in the moment and saves those people and kills the enemies, the Purple Heart just happens, right? You have to let key point, you have to let it come to you. You have to let it come to you. When I used to play professional golf, um, one of my really close friends that I was college roommates with, he was a former world number one, and uh, Dustin Johnson is his name, and um, he would always tell me, "Bro, just let it come, man. It's just let it come, bro. Shit, just let it come." That's what he would just say. Just let it come to you, man. And so, like, but there's a lot of weight in that, right? He's not sitting there like, coming down the stretch with a two-shot lead thinking, "Oh man, I better win. Shit, I got to hold on to this." No, he's in the moment. He's focusing on the process. He's thinking about, he's probably looking at the trees and, probably in la la land with his mind clear, right? Trying to stay in that moment. And then when it's time to hit the golf ball, he's focused on the yardage, the distance, what the wind's doing, what the lie's telling me, right? Where he needs to position himself on that particular shot to give him a good opportunity to either make birdie or protect from making a big number or both, right? So it's like the strategy behind it, right? And so it's really important to think like this. And you know, when you're looking for a setup and you identify something, you want the whole picture to be clear, like a puzzle piece, right? So if the puzzle piece is okay, one, I see this overextension. All right, maybe I have a level here. Okay, great. Oh shoot, I missed it. Okay, wow, they came down. Now we have a lower high right there. All right, I'm taking calls as soon as this next candle closes. I'm risking this level right there. This wick, I'm risking it. Well, you're up. You're up. Like, that's actionable in the moment thought process that's going to define your risk quick, get in the moment, and take advantage of something, because if it breaks down, okay, I'm out, 5%, 10% loss, no big deal, right? Move on to the next trade, right? That's good habits. That's thinking through the process properly. And that based on this, aka Tingleberry reversion, right? This thing has a tendency to snap back. We know this because we can look at it in the past. It just happens all the time. And on the hourly, it happens a lot too. Look at the hourly. The hourly 13's up almost 100 points above us, right? So it's not too far-fetched to say, yeah, we could see a 5,000 retest tomorrow. Like, that's not crazy to say that, you know? And that's just based on stats, right? Let's just take a look at this. This is math, guys. Right? Look at this. Look, let me go to ES because I don't have as much stuff on here. Okay. Well, look at that. Held this level. So look, reversion down, back in, rides down, reversion in, right? Extension down, back in, extension down, wick up, extension down, and it's hanging out here. Now they could float it overnight and let these EMAs catch up, right? And then drill it again. That's a possibility as well, right? This is just like basic stuff, right? That you want to really be paying attention to. Not many people, I don't know. There's people that trade this style, I'm sure, but there's also other things that I like to use within this, right? So I talked about compression, right? The tube of toothpaste. What does a tube of toothpaste do? Right? It's got liquid inside it, and it's got the casing, right? Let's take this. Let's just do this, right? It's so simple. Okay. There's our risk, right? We have a top here, we have a wick here that's clearly defined, right? And then we have the uptrend, right? And then here, this is the tube, right? And the price action is the toothpaste, right? So what are we doing? We're going wide, and now we're tightening up, right? And as it pops, it's going to move fast, right? So that's compression, right? One of my good friends, he runs a room, and his name's Daff. I think he might be in here. He runs the Swing Lounge, and he's a great trader. He calls it the pinch. It's the same thing. He reads it. He reads it at different time frames. He reads it on all time frames, and when you get these moves out of these pinches, and you're going to get massive reactions. And what's even crazier and cool is this. Say, for example, watch this. So, say, for example, price breaks out tonight, shoots up, and then it comes back down right to this level, right to the apex of this triangle. There will be a massive reaction there. It could float here. If it does, you could get a read on it and you could get a massive move down, or it retests and holds the angle on the tip of the triangle and it'll fucking rip. So I'm a huge proponent of triangles and angles and using those to your advantage in the market. So this guy, Richard Wyckoff, developed these schematics hundreds of years ago. I think it was in the 1900s, if I remember right. But what do you see, guys? Everything is a fucking triangle. And if you think about it, it's like, oh, get long. No, you're fucked. Oh, get long. No, you're fucked. Oh, get short. Oh, you're fucked. Right? You see what I'm saying? It's like very difficult. But what's happening is this is a schematic that was built by this guy to be able to, for larger operators and big funds to understand how to accumulate shares and shake people that have weaker hands out so that they could control the supply of the market. And when the supply gets controlled on the low on the accumulation, then you see low volume moves up. Okay. So like the last few years, we've seen that because they've controlled the supply. And don't make me go back out to the weekly. You can see that we've distributed and now they've gotten rid of their supply, right? So it's distributing back out. And there will be a point here, probably in the next month, where it goes through a reaccumulation, probably over the next 2 to 3 months once we bottom soon, right? Once we bottom soon, after most of these catalysts are out of the way, we're going to bottom and it will go through an accumulation process, right? And understanding this is going to help you tremendously. Understanding it on the smaller time frames, the larger time frames, all of that stuff. It's really, really important. So, and you can see here, it's clear as day. Like, let me get out of this for a second here. Let me clean this up. Okay, I'm going to make this really simple. All right, so I'm going to all right, so you can see here, there's a downtrend. Make this really, let's use black and make it. So you can see that's the downtrend, right? Very simple. Actually, you know what? I'll make it a different color. I'll make it purple. There we go. So there's the downtrend. Okay. Now you just ride the downtrend. Every time you touch it, you can ride it. Now there's more triangles. We can see these triangles. I don't need to draw them out for you, but there's also falling wedges, right? You have a falling wedge right here. Hold on, let me grab it. Right there, a falling wedge has compression. Right there. There's the falling wedge. Probably a little tighter than that, but this thing, I don't like how it does that. There. Okay. So there's the falling wedge. And what's happening? You can see it breaks out, retests, breaks out, and then it comes back down and retests the apex. Comes back up and starts to go. And then you have another triangle. You have triangles all over. These are tests, right? And then you also have a triangle here, which is a flag. Right? It's a bull flag. Another triangle. And what's happening inside that triangle? Compression. Boom. Right? Because what's happening there psychologically, Everybody like watching this reaction. Short here, short here, short here. Oh, we're back in the range. Let me short. Watch out. Late phase accumulation, breakout. See ya. See what I'm saying? So you understanding cycles and things, you don't need to know all this shit. This is just EDU session. And we do have a Wyckoff EDU session down below. It's fantastic. We have Sir Wyckoff, that channel. He's the best, in my opinion, at schematics. You can go and check out his channel and take a peek. He's posting in there right now. The charts are a little different because he's got eye issues going on right now. Don't tell him I told you. Just kind of so you got to zoom in. So he's got but just because he's posting these charts doesn't mean it's going to happen. Okay, please understand that, right? But he's really, really good. But it doesn't mean it's going to happen. It doesn't mean it will happen, you guys. Okay, it means that's what we're looking at. And then we take a look when the market opens and we see where things are setting up, what our data is telling us, and then we make an informed decision whether it's going to be a day trade or we can take swings off specific levels. Okay. We also have Hawk Holdings. Okay. Hawk Holdings is a great guy too. He posts all his EDU. My channel's under construction. RS Fib Futures, his is under construction. We'll be posting our stuff in premium chat for our morning write-ups. And then Florida Hokie, he's got a great channel. The guy's good, really good trader. Posts some good data, and then posts really good trade setups. Our AI corner is also under construction, I believe. Yeah, it is. Yeah, we're still working on some stuff in the back end. It's in beta mode, but he'll be posting that stuff as well in premium chat. It's good to understand ranges and things really fucking dirty. So then we have Only Bags Flow and Trades channel. He posts flow and he also posts setups. He's got a setup that we talked about, what we really like, which is the Palantir 60 puts. Oh, he said, okay, yeah. So he posted that some of them were closed out. It looks like it. So this is a trade. Let's take a look at PLTR. So, I mean, look at this, guys. Like, this is a setup that we traded these contracts from 55 cents on PLTR to, I closed mine out at like 290, I think, 290 bucks. Yeah, 50 bucks to 290 bucks, I think it was. But, and then we also took the 70s for like $1 for from 1.7. Those things paid fat. So we're looking to re-enter this. We want to see a retest of this trend line. So this is the 1 hour. Okay, you can see here, this is a big level here. Let me mark this out. That's a big spot. That wick, where's the low on it? 71.93. So if you want to look at this, mark out 71.93. Okay, that's the spot. Now there's two ways to trade this, okay? Okay, this thing could come up, retest it, and we would be looking to take shorts on this retest. Why? We have supply. This is supply over here, and the daily and the weekly are distributing. I just showed you the distribution schematics, right? Let's take a look quick. Okay, this is a distribution schematic. You do not long it unless it's a scalp trade. You know, personally, I would love to see this thing come up to this trend line into this range break, right? So if we're going to take some trend lines here, okay, so it shoots, let's just say, yeah, that's a big spot right there. So it lines up with that trend line. So we have a trend line tap here, and a hold here, and they broke it and retested, and the retest failed on Friday. So Now let's take a look at the hourly. Or sorry, whoop, this is 2 hour. Let's take a look at the 4 hour. So the 4 hour is a little overextended, right? We can see that. We have a nice crossover, which is where the EMA is cross over the 200. The 13 is cross over the 21, and they both have crossed steeply over the 200. That's bearish. You don't long that shit. You short the pops. What you could. So only bags is an EMA trader. You can take. You can. This is another strategy. Okay, and I'm just giving you guys some ideas, some simple strategies, and it's not like, oh man, fuck, I got to remember all this shit. No, you don't have to do that. I literally go over this all the time, just because, um, you know, my way of teaching is I like to. So I used to teach golf, and the best way that I learned was repetition, constant repetition. I never liked it when somebody would be like a coach would be like, when I was young, he'd be like, yeah, here, fix your grip, fix your grip, and then let's work on the takeaway, and you go work on the takeaway and your grip, and then come back to me in a month. That shit doesn't work. Sorry, not for me. The best coaches that I had were like, okay, it was like, this is where your grip needs to be, all in 1 hour, hour and a half or 2 hour session, and be like, okay, we're going to tweak this, we're going to tweak this, we're going to tweak this, and we're going to tweak this, all four of these things, and we're going to get you there, and this is where we want to be, because this is going to help the compression, and this is what DJ or Tiger, whatever, Sam Snead or Hogan is doing. So these are the types of things that we need your swing to do, right? So, get you swinging the best possible way you can in that time, at that time. I like to say, throwing the fucking book at you, right? And then the next time you come back, maybe your grip's a little better, maybe your pivot and your torso rotation and your and how you load is better a little bit, but then you're doing something a little wrong here or there, and then you do it again. The whole book comes at you. He gets you swinging it great, you're flushing it, you're playing great, and then a week later you're a little off, and then you come back. You know what I'm saying? So like, as you go through that process, then the mold, it starts to mold, the swing molds, because you're not just like piecemealing everything together. It's a fucking joke. So sorry. But the best way to learn, in my opinion, is throwing the book at you. You're going to be overwhelmed in the beginning, but as you hear it over and over and over and over, you become a fucking killer. You become a killer. You define your risk. You see the alert. Okay, I'm in. I got 30%. All right, I'm scaling. Stops are moved up. All right, I'm up 80%. I'm locking it in. I'm done. Next trade. All right, I'm in. Got a better entry than the alert. Ha ha, sells. Got a better entry. All right, now I'm rocking and rolling. I'm in. I'm in. Okay, I'm out. All right, rinse and repeat. All right, I like how these EMAs are set up. If we get a retest of this 13 right here at this trend line, right? If we get a retest to that, and I'm taking shorts. Why? We got so much stuff sitting here. We got supply here, right? This is the range, and we have a trend line. Okay. Um, we have a trend line here, right there. And if it retests this trend line that it is held very aggressively, this move is going to be aggressive. So I want to talk about another thing that's technical. All right. I don't think he has a fucking clue. We're doing EDU. It's fine. Whatever. It's funny. But anyways, so what else is here is this. There's a huge H pattern. All right, let me check something. Hold on. Uh, Okay, so there's sick H pattern. This H pattern has like a has a history of making a specific pattern, right? So it's like here's the H, we see this big H, and then you also have another H inside the big H, right? So you have here and then a break, right? So what happens on H patterns is this. Let's say here's my support, right? This happens all the time. Okay, and here's the H, right? What happens within price action and psychologically, like behavior finance with people when they're trading an H pattern? Okay, this is what happens. Price comes down, people chase the hole. They stop hunt them, they chase the hole. They screw the people chasing, and then the price pops up. It reverts, and it's usually into a supply zone, right? You can see here this H right here stopped right in this supply zone over here, and then what happens? It starts to make another H, and as that H comes down into the equal low, right there, that other previous H. What will happen is 80 to 90% of the time, they'll stop hunt people chasing the breakdown. So you'll see this stop hunt, boom, right? And they'll shoot up. And people now people will flip long thinking double bottom, right? And so what you want to do is you want to look at the price action as it stop hunts people. And what are we seeing? Are we seeing a doji? Are we seeing tall wicks into a previous structure over here? And this is weakening here. Then you take shorts because these people that are chasing long again for double bottom are going to get fucked again. And all these people that chase short in the hole are already stopped out because they're shitting themselves. Right. And they're like, oh man, now we're going back up. It's a W bottom. It could W. And then all of a sudden, watch, it goes like this, fucking drills. It's dirty. It happens all the time. So when we see these H's set up, I love it when they set up late in the day, right? Because why? Because the fucking premiums are so cheap. They're so cheap. And what you'll see is they'll set these H's up and they'll be like, oh shit, oh man. And then the premiums get cooked on the put side. They get smoked and they're so cheap. And then what you'll see is they start loading. Smart money's loading puts here and price gets weak and then they explode 500-600%. We have hit in this room. I can't even count how many times we've hit that exact fucking trade right around 2 p.m. algo, roughly into power hour, based on that because you also have charm kicking in too, right? So we talk a lot about charm here. You'll learn about gamma and charm and how the options are affected and what you want to look for on the option chain. We read the tape in here. We read the chain. We do a lot of these types of things intraday. And for those that are new, you'll learn some of this stuff. And you know what? If you're one of those people, you got a day job, you don't have to learn all this shit. You can literally just take a signal, make your money in the morning, go to work and chill. Not a big deal. Do whatever the hell you want. But that's pretty much it. If anybody, so for tomorrow morning, okay, um, you know, look at that. Another look at these reverse. So let me just say this. Okay. Extension, reversion, extension, reversion. It's just nonstop, right? So don't chase it. Sell it to these people chasing. Sell your calls here. Get to puts, right? Look at the structure here. It's clear as fucking day. I said I'd take a short here, and I said I might be wrong, but look at that. If I took a short there, I'm already up 20 points, guys. 20 points. Damn near called the top live here if you want to go back on the stream. So they could have flagged it and invalidated it, and that'd be fine. I would have stopped out, right? Why didn't I? Because I had risk defined. That's why. Look. I had risk to find this wick right fucking there and this wick. They did not break the trend line. They did not close us over it. They did this one, but the next candle was indecisive, spinning top candle. That's not a good thing right there. Looking at the volume, weak. Yeah, buy side's decent here, right? But this is nothing to write home about. And look what's happening. This is lower highs. And watch this. What do you see, guys, on this 5-minute chart? And this up here, in this zone of the RSI, what do you see right there? What does that remind you of? Anybody want to say it or throw it in chat? What's that RSI look like? Come on. Yeah, but what else? A UTAD. UTAD. Remember? The UTAD. And bearish divergence. Correct. Good job, mastering. So bearish divergence and a UTAD. The RSI communicated a UTAD. You can see it there, clear as day. This thing should distribute. I think it's like up thrust into distribution. Let me just double check. Oops, hold on. Shit. I'll get you the exact thing. I don't want to be wrong here. Yeah, yep, I was right. Up thrust after distribution. So it's up thrust after distribution. I'm going to show you. I'm going to list it out here. So this is actual. Here you go. Watch this. False breakouts above resistance. The UTAD occurs when price rallies above the resistance level of a trading range, to creating a false impression of continued bullish momentum. This move often reacts, and look what happened. So this was a low. So actually, oh, excuse me. That looked like a UTAD. So you could have caught 20 points on that 5-minute dump. Market psychology and liquidity. The UTAD sweeps liquidity by triggering stops above resistance levels, further trapping buyers while institutional sellers offload their positions. Right? It's pretty crazy how this guy developed all this stuff in the 1900s, just from that side of it, you know? If anybody has any questions, feel free to hop on or throw a one in the chat and I'll unmute you. I have quite a few people server muted just because I was getting some hot mics. But this thing could really compress up. I would like to see that, to be honest with you. I'd like to see this coil up right into the open, or that London open. Let's go back to the 15. It's a little easier to look at. What's up, RS?
Going on, bro?
Just letting everybody know that we're just going to do some EDU. We talked about some market psychology, talked about trading a high VIX, talked about compressions, talked about extensions, talked about how to handle the alerts, and what was I going to say? Let me see. Where the hell is it? So I look at where this thing lines up. So this is the downtrend. Let me get out of this. This is the downtrend here, this blue line, and this is the uptrend tonight. And it's compressing up. And look where this apex lines up, right with the London. We're going to get a reaction tonight into the London. That's for sure. It'll be interesting to see which way they take it because they're not buying calls on the chain tonight. But the puts were already pre-positioned. So I would be leaning to downside based on positioning. So one thing you guys are going to learn in here is how to read the tape really good. Yeah, that thing's going to get wedged up real quick. I hope they hold this, and I want to see a massive reaction to the downside. That'd be fun. But anyways, yeah, I think heading to 4,700, yeah. Yeah, I mean, we have the weekly 200 on SPX at 47.38, I think it is, or 47.40. If we break this low, let's take a look at structure here quick. So if you guys don't know, RS is the best fib trader I know. He's unbelievable. And he's got RS's corners a little under construction right now, but he'll be posting his stats in the morning. He does EDU in here. We do a lot of education. We're not here sitting here just, pumping alerts and, talking out of our ass, that's for sure. Every trader that has their own channel, the pros and admins in here are great traders. Okay. So let's take a look here. This is the daily. Here's the weekly. Yeah, that's sitting at 740, 47.40, 47.39, 33 to be exact. I think we could see a nice liquidity grab underneath it to 4,600 and then see a similar situation on the weekly that happened in COVID, right? Was it? Yeah, this. See, this candle, that's what I'm really interested in. I want to see this drive down, and once they break the weekly 200, I want to be looking reversal side. I would love to catch that reversal because that's going to be a nasty move up. And then we'll see where they load it because it was sneaky as fuck. Look what they did. They gapped it down, right? Gapped it down, sold it off, bought it up, and closed it right above the weekly 200 at this time. And the next week, they gapped the fucker down a couple hundred points and closed it near the lows. Can you imagine how many people were so bullish off this weekly candle and had stops in place right under the weekly 200, and they all got ran? Yeah. And then, boom, see ya. Yeah. I mean, that's called pattern recognition, guys. That's it's just understanding that's a possibility in a high probability scenario based on stop hunting. And look at the write-up we just sent in there. Market psychology and liquidity. UTAD set up liquidity grab by triggering stops above the resistance and further trapping buyers while institutions sell off their positions, right? I just said that. Think about it on the other side. What happens? Okay, let's reverse it. What's a spring? A spring is when a spring sweeps liquidity by triggering stop orders under a key resistance level, trapping sellers while institutional buyers load up their positions, right? The same shit. So, just understanding these things is just going to help y'all. But Palantir's top watch, I want to see a retest of this, ideally 78-ish zone up to 80. I don't know if we're going to get that. Maybe they retest, who knows? But if they break 72 and that fails, I'm taking puts off 72, risking a daily close over 72. So there's my strategy, right? There's the strategy we're going to take. Either A, they pop it up. Either A, they pop it up, we take puts right there, right? And risk this line. Or B, they break it, retest it, and we take puts here, risking a daily close over this level. Or we wait based on intraday price action and see where they close it. If they close it in the range here, in this range, we can still scale in and take a starter position in puts. And then if they break it down and it goes, great, we're in something. If they don't and they pop it up, we can add more size. Right? So that's my trade plan for Palantir and SPX as well. So, but there's just a lot of night left going on, and it does to me look like they want to compress it and pop it. So higher the better, so we can get in some puts. I am bearish. I am not bullish. Okay, and I don't. It's fine if you want to be bullish. It's fine. I didn't say I'm not going to play calls tomorrow. I didn't say I'm not, I'll play calls and puts every single day of the week. I don't really care. But overall view, I'm not bullish. I'm just not. If my boy's not buying at 5,000, why the fuck would I buy? If they're not rolling off all their hedges, they're still 60% hedged, and they're the top performing hedge fund in the market for all the top boys, why would I even think about buying? I'm not. And I'm not going to alert you guys to be buying heavy or anything like that, because it's just, that doesn't make sense to me. It's just stupid. And I don't want to, I'd rather miss the trade and us wait to get in on confirmation than to buy and see this fucker drill another 100 points, or sorry, another 1,000 points down on SPX, or 800 points to 4,100, like nobody wants that. So it's about being smart and tactful. Man, look at NQ, bro. Jesus. RS, you see this, bro? Jesus.
Yeah, them shit's drop, but like
This is the
I
man,
think this is, I think we that chart I put out for you. I think we're in that little area. I think we got the reaction that I was looking for towards the bottom. Did we hit 16,413? No, we hit 16,460. We're in
that's pretty close.
yeah, we're pretty close. Like, we're in that
But
little the 20.
NQ is lagging.
Yeah,
It's still lagging, right? Look at the
yeah.
distance NQ. I mean, well, actually, let's look at QQQ. That's a little easier. This is better. So this thing looks dangerous. I mean, you could get a wick up this week for sure, like over in here. Look at this, looks nasty. Everybody's thinking, well, you know what? Look at all these big candles and on the monthly, and look at, these little candles. It's all relative, guys, right? Back here, we could take a look at this. Look, back here, it was 186 on price, and it was down 23%, right? Or no, more than that. 25%. Qs were down 25%, right? Over here, on this move down, 37% over time. Okay. This is a little different. Okay.
That shit was
Oh,
fast.
this is different. Oh, actually, my bad. I did COVID wrong. My bad. COVID's this.
Yeah.
Roughly 30% in 2 months. Okay. We are at, we're not even there, I don't think. Are we? Yeah, we are. No, we're not. We're not. So, like, if this is COVID and these are the average drops, 37, 30, 25, and we're at 21. What is everybody so excited about?
NQ is at 27 though.
Okay, so NQ's at 27. So QQQ will open up right there.
Yeah, here we go. Yeah.
All right. And so if we pull her down to 30, that's 373. That's a nice spot to consider longing.
Yeah, 50% from COVID lows to all-time highs is about 30%, 30.5%. So that's about
Yeah,
that would be 50% range. So that would be
that'd be a
decent.
beautiful spot to start to build our positions. I have a laundry list of the top stocks that these big boys are going to use. I want to be in those stocks only on longs because if I'm in those, I know there's a 95% probability that everything is going to easy double. The, you want to ride with the big money. You don't want to be bouncing around with like the little penny stocks and shit like that, in my opinion. You want safety. You want what's going to take us out of the hole, right? That's what you want because you start hot dogging with all this other bullshit and stuff, and yeah, you can have some other action on other things. It's fine, but you want like, Nvidia. We can grab out of the money leaps on Nvidia. We can grab Nvidia shares. We can grab a lot of this really good quality stuff. And when this sucker reverses and it pops, you're going to get so paid because those are the stocks that are going to lead us out. So, you want to add anything, RS?
No, I mean, no, shit, you cover. I've been listening pretty much the whole time.
Okay. I'm going
You
to take a
covered pretty.
measured move on this flag. Measured move is right to the weekly 200 at
Yeah,
391.
yeah, yeah. We got some room. Like just like I said, I'm bearish with you. Like we're underneath previous. We've knocked out the previous year's low on NQ. We got to do it on it. Did ES do it? I know ES. I think ES did. Yeah, ES knocked out the lows from the previous.
Let me
Yeah.
see here. Let me take a look
Um,
at this.
yeah, ES took out the lows. NQ took out the lows. US 500 hasn't taken out the lows yet. So
Look at that. This is almost at the 200 on ES.
you know,
That's
so
interesting.
we got a
Wow.
little bit go. Like I we're underneath NFP Friday. If we underneath like well, we're underneath all my stuff to go to even try. I'll just short pops. Short pops. That's all I'll do. Like
Absolutely. Absolutely.
maybe
I love it.
it might be like every now and then a chance to go like long for a quick, but I would keep tight stops and and just let admin walk y'all through it. If y'all
I'm
aren't comfortable with what you're doing.
I'm gonna run through some positioning quick and then we'll wrap it up. So as of oh shit, it updated. What the fuck? Sick. Whoa. So for SPX tomorrow, we have 2.7 billion sitting in puts. I did say 2.7 billion sitting in puts for tomorrow as of today. There's literally 2 million in calls. Do you guys hear that?
Wow.
That's a 1,000 ratio, isn't it? Oh my God. Dude, holy shit. Look at this.
Mhm.
Let me stop making. So then also we have this. I'm gonna read off this. This is crazy sick. All right, so 2.7 billion put side for tomorrow, 2 million call side. Monday, 1.1 billion calls put side, less than a million for Tuesday, for less than a million call side. Wednesday is 1.4 bill put side, 3 million call side. And then Thursday, it's a little stickier actually. So Thursday's interesting. And then, whoa, Friday is 6 billion put side, 69,000, or sorry, not 69, 69 million call side. Those are heavy ratios, you guys. Oof. Yeah, actually, Monday's the best ratio, actually, if you look at the numbers. But the weight that's sitting, yeah, yeah. Short every pop tomorrow, pretty much. That's what it's saying. Yeah, pretty much. That's what it's saying. And then the key thing is we're gonna just. I mean, these are just numbers, right? I've seen them flip it, right, and squeeze it up and out. But they have to reposition, and then we need these deltas to get wiped out underneath us on the put side to relieve pressure, and they need call buying 2x to 5x on the upside to create more upside pressure, and they need to start selling vol off to even like consider going long. So anyways, that's that. So man, wow, that's crazy. For the 17th on this is non-AM chain for the 17th of which is OPEX. 7.5 billion put side, 82 million call side. Dude, that's sick. That's awesome. Okay. Anybody have any questions about today?
Hey, what
Throw
strikes
it.
are getting hit the most? 33 for OPEX.
We have some strikes that we're ready to deploy. And let me think here. We have a list of them. I'll be putting them out tomorrow, and I'll message you later.
All right. What about NVIDIA? Did you take a look at that chart on live today or no?
No, I'll take a look at it right now. Ugh, yuck. So my first target was 91. That hit. Yeah, and I think overnight it's at 80 something. So the big spot underneath 81. So there's a huge amount of gamma and deltas sitting on 80. So if 80 breaks, it's in fucking trouble. It needs to hold under 80. It has to hold 76. This is a large distribution top on NVIDIA. Can see this is clear as day. You guys should be seeing these setups, like understanding what a distribution top is. It's clear, right? Look at this weekly, same shit, right? Look what happened to this. Look at NQ, same shit, boom. Right? These are distribution tops. And Apple, same thing, drop, right? Microsoft, same thing, getting going. If Microsoft extends, it has room to extend. If it does, the market's going to really get cooked. And then let's go to Meta, another UTAD right there, perfect UTAD. See the overshot right to the upside, overextension on the call side, and then drill. Google, same thing, distribution top coming down. It's got more room to go. And now let's go back to NVIDIA. It's got room to go, right? They broke the range finally. Now it's got room to 76. They did hit the 77s, I believe, and 72s for June puts. Pretty heavy up in this upper range in the 100s. I believe it was right on 100. So anybody else want me to take a look at anything? Please get some good rest. Protect your money, you guys. I'll leave you with this. Protect your money. If you have a goal, right? Say you have a $500 or $5,000 account, okay? And you should have a goal. Maybe it should be $150 to $200 relative to your account size. If you have a $2 million account and you have experience trading, obviously your goal is a little different. Maybe it's 10K a day, right? Maybe it's 20K a day, depending on the size you use. Make sure it's all relative. Your goals are relative to your account size and your trading skill sets. Once you hit your goal, just be done for the day. Just chill, learn, ask questions, and then if you made a lot of money, maybe take 10% of those gains that you made. Maybe you made $5,000, and you're like, all right, I'll risk $500 towards an end of the day play, a lotto, and there's maybe a great setup for cheap puts or calls or puts, and then you can juice your gains a little. Maybe get 400 or 500% on a little bit of extra cheese, but you're only going to risk of that $500 because you made $5,000. You risk 10% of your gains. You risk 10% of the 10%. So you're going to stop out at 50, $60, right? Maybe 15% if you want a little extra leeway, right? So then that way you're not giving back all your gains, right? So that's just my 2 cents. Welcome if you're in the green room. Appreciate you all. Just be careful on what you're listening to and reading out there over the next couple of weeks. because there's gonna be a lot of bullshit flying. There's gonna be a lot of like media, and there's gonna be, and the price action is gonna be crazy. There's gonna be a lot of fast stop hunts. So don't get freaked out. You need to really hold your own and be strong and be a mental giant. Be confident. Be certain without have certainty without logic, and think really clearly about your decision making before you just jump in anything. Okay, and it's okay to not take a trade. All right, it's perfectly fine. Like the people that have been in here from the beginning, I mean, we hit 100% trades every day, damn near. Pretty close. If we don't, it's like it's rare. Okay. And if you miss a couple or you're working and you don't catch them, it's okay. You'll get another one, or take the swings. If you're working, you're like, maybe you just do some of the swings. Okay. So, but still make sure you use the stops, use risk management. This is not a game. We don't fuck around in here. And the last thing I'll say is I have zero tolerance for disrespect and rudeness. It's insta ban. And definitely no politics unless it's gifts. Gifts are fine, just no politics. You can drop news in the chat, it's fine, I don't care. But I don't want political discussions. I don't want opinions about who, if they don't like Trump or if they do this, or I really don't care. I don't. We're here to make money, we're here to have fun, and we're here to party, and we're here to make a lot of fucking money. And that's the name of the game, okay? So that's the deal. All right. I hope you guys have a great evening, and God bless.